So let's start with the core idea driving these policies: Trump's tariffs on China. The administration framed it as a way to redress trade imbalances and push back against what it called unfair trading practices. And while the rhetoric might have resonated domestically, the global ripple effects, both economic and geopolitical, have been huge.
Yeah, huge, but necessary. Vikram, this was all about sending a message. You don't let countries like China steal intellectual property and flood markets unchecked. That's economic warfare, plain and simple.
I agree the policies signaled a more assertive approach, but let's look at the mechanics here. Tariffs on products from China, electronics, machinery, they affect more than just the importing country. We're tied into these global supply chains where parts are sourced from multiple countries. Imposing tariffs on China means prices go up everywhere, not just for Chinese goods.
But isn't that the point? Shift manufacturing back home, right? Bring jobs back to the U.S. and weaken China's chokehold on the global market. It's not pretty, but sometimes you need to take the fight to their doorstep, even if it stings a bit here.
That's one perspective, Duke, but consider this. China hasn't exactly taken these tariffs lying down. They warned about retaliatory steps, including restricting the export of rare earth minerals. Now, that's strategic. Those are critical for manufacturing everything from smartphones to missile systems.
Which is why we need to wake up. If Beijing controls the raw materials for half of our industry, they can call the shots. That's a no-go in my book. We should double down and secure alternatives, dig for resources domestically, or partner with allies who've got our back.
True, but shifting supply chains isn't instant or easy. And the tariffs have amplified inflationary pressures, making things more expensive for American consumers. The idea of taxing imports so heavily, it's like adding a consumption tax on everyone silently.
Okay, but the alternative is, what? Keep bowing down to cheap imports while losing leverage? That doesn't sit right with me. Sure, there's pain up front, but in the long run, these moves could secure the U.S. economy from being outmaneuvered on the global stage, don't you think?
Potentially, if managed carefully and strategically. But it's a high-stakes gamble, especially given China's other angles of leverage. For instance, their willingness to retaliate isn't always economic. Think geopolitical pivots or regional alignments that could shift the balance further out of favor for the U.S.
You've got a point there. Still, I'd argue it's about showing strength. Like in any fight, you gotta be ready to take a hit and keep pushing forward. No room for half measures.
That's a fair point, Duke. But speaking of strategic responses to economic uncertainty, let's look at the rising role of gold in these times. With inflation creeping in and trade uncertainties piling up, investors are flocking to gold as what they call a safe haven.
No surprise there, Vikram. I mean, gold's been the go-to for centuries. You're in trouble? You back it with gold. Heck, it's practically a rule in wartime logistics. Cash is shaky, but gold gets the job done. No questions asked.
Exactly. And today, central banks are stockpiling gold like they're preparing for the worst. Just last year, over, nearly 1,000 tons purchased globally. It speaks volumes about how uncertain governments are about currencies holding their value.
Right, because fiat currency, it's paper. It's trust, not value. Gold, that's real. In times like these, you want to hold something solid. What do you think's driving that rush? Just inflation?
Inflation's a big part of it, yes. Rising prices carve into what money can buy. So gold sort of acts like this financial backbone. It doesn't erode the way a dollar might. Add trade tensions on top of that, and you have instability pushing central banks and investors to hedge their risks.
Makes sense. Then you throw in Trump's tariffs. Those are driving costs up on imported metals like gold, aren't they? Cut the flow or jack up costs, and boom, price spikes for everyone reaching for bullion.
Absolutely. Tariffs are a double-edged sword here. On one hand, higher costs make some investments harder to justify. But on the other, the volatility makes gold even more appealing. That's the paradox. It's both a victim and a benefactor of the same policies.
Yeah, it's like running a mission. Everything gets pricier, but what do? You secure what works. And gold works. I mean, back in the military, we always treated it like insurance. You carry it when you can't trust anything else to hold up.
It's also, interestingly, a collective signal. When so many central banks are buying gold in bulk, it tells the market something deeper. This isn't just about supply and demand. It's about preparing for systemic risks.
Well, you don't need me to tell you. We're staring those risks in the face. And this isn't just big governments. Smaller investors are catching on too. They might not stack bars, but coins, ETFs, the demand is surging.
True. And while gold prices fluctuate, its role as a stabilizing factor, especially in uncertain times, makes its appeal unwavering. The question is whether it'll stay a solid hedge in the long term as global priorities shift. Duke, speaking of how nations prepare for uncertainty, have you noticed the moves the BRICS nations are making to reduce their dependency on the US dollar? De-dollarization has been picking up momentum, with these countries actively exploring their own currency frameworks to bypass the greenback in international trade.
Yeah, and it's a gutsy play. These guys see the writing on the wall. They know the U.S. has been calling the shots with the dollar as the world's reserve currency, and with Trump hammering tariffs on anything that moves, they're looking for ways to fight back. Makes sense, right?
It does, to some extent. For decades, the dollar's dominance has given the U.S. an edge in international trade and global politics. But as BRICS nations find alternatives, be it bilateral trade deals in their own currencies or the push for a BRICS currency, it signals a shift in not just financial but also geopolitical power dynamics.
And you think that's a bad thing? 'Cause I don't. Look, the dollar's position brings power. Yeah, but it also puts us in their crosshairs. If we're going to play hardball, we should expect moves like this, right?
True, but there's risk here. If the dollar loses its centrality, US borrowing costs could rise as demand for dollar-backed assets shrinks. And let's not forget the broader ramifications. Emerging markets could gain leverage at the expense of established economies, shifting trade flows and alliances.
You're not wrong, but let's call it what it is, a chessboard. We've made our move with those tariffs. They're responding with theirs. The question is, are we ready for this new game? Do we have the pieces lined up? I'd bet we do.
Perhaps, although BRICS' collective strength is significant, their combined markets and resources offer them negotiating power. If they manage to stabilize trade without the dollar, that could redefine international economic standards, pushing the US to adapt in unprecedented ways.
Adapt or double down? I mean, we've seen Washington step up before when cornered. Look at Trump's hardline policies. They've forced a reevaluation of supply chains, partnerships, and even critical infrastructure. Whether you love or hate his tactics, they're shaking things up.
Shaking things up, yes, but sustainability is the real question. Forcing short-term wins without addressing long-term structural shifts might leave the US playing catch-up in a more fragmented global economy.
Fair, but the way I see it, you've got to push back when challenged. Sure, the BRICS coalition looks strong, but internally, they've got their own issues. Economic volatility, political instability. They're not as unified as they'd like us to believe.
That internal disunity could slow them down, yet their efforts still represent a significant challenge to the status quo. As globalization enters this multipolar phase, the question isn't just who leads, but how these new dynamics shape the future.
In that future, it's going to take resilience, strategy, and maybe a little bit of risk-taking. Like they say in the military, hope for the best, but prepare for the worst.
And on that note, Duke, it's clear the world is redefining its economic relationships in real time. As power shifts, so must practices. And for all these challenges, opportunities arise too. It's a fascinating moment to witness, and I'm sure we'll be discussing it for years to come.
No doubt about it, Vikram. All right, folks, that's all for today. Stay sharp, stay informed, and we'll catch you next time.